Hello, welcome to True Options Masters for our monthly market outlook for the month of August 2021. I'm Chris Morelli. I'm your chief editor of True Options Masters, and I have with us here our two maestros. We've got Chad Shoup, CMT, and Mike Carr, CMT CFTE. Hey, Mike, before we get started, I think a lot of our readers know what a CMT is, Chartered Market Technician. There's only a few thousand of you guys in the world. To put that in perspective, there's hundreds of thousands of financial advisors in the United States alone. But the CFT, that one's a little bit less common. What is that one, Mike?
That's issued by the international organization. It's the Certified Financial Technician. It involves more of a global outlook than just the US-centric market approach that the CMT takes.
Gotcha. Was that a hard designation to get?
It is. It's a little bit more difficult because it is a global perspective. So we are very used to thinking about the US in our
US bias. Center of the world, strongest stock market in the world.
It's not, Australians do the same. Europeans do the same. We all have a home country bias. So the CFTE forces you to lose that bias and think about markets in other countries. It helps you see markets with a different perspective.
Well, I think what qualifies you guys so much is you've got some of the highest certifications and qualifications that a True Options Masters can have. That's what separates you guys from the fakers, the spammers, the scammers out there, which is why I'm so incredibly proud to work with you guys. So here's what we're going to be doing today. I'm going to ask both of you what you guys are seeing for the month ahead, because as True Options Masters, we don't necessarily care about what's happening 6 months from now or a year from now. We care about what's right in front of us. We want to get those short-term trades going. So I'm going to ask each of you for a 1 to 2 sentence summary for what you see, and I'm going to kick it over to you guys. Going to share some charts, walk out what you're seeing. Before we do that, I just want to take a quick opportunity to just thank our readers. So you guys, we just crossed our 3-month anniversary yesterday, August 3rd. Our first issue of True Options Masters went out May 3rd. And I've got to tell you guys this, we had 6,000 readers, and those are the readers that carried over from Chad's weekly options corner. So OG weekly options corner. Glad to still have you guys on the file. But in 3 months, our readership has grown from just 6,000 readers to last week, we crossed the 50,000 reader mark. So guys, this is incredible. It makes me so absolutely thrilled. We had this vision for creating, truly the best source for options guidance, that is out there, period. And it is so exciting to see so many of you, running towards us, and you're opening our emails, you're engaging with our stuff. And that makes me so thrilled. And I do want to read a couple of emails I've received from some of you. So this one comes from Russ. Russ says, Mike and Chad, True Options Masters is probably all I will ever need when it comes to what I'm personally looking for being active in the markets. It's by far the most impressive program I have seen, and I make money in days on most plays. That's so exciting. Here's another one from Boone. Hello, Chad, Mike, and everyone else. I've been really enjoying the True Options newsletter. It's taught me some valuable ideas as I continue learning about options. Boone, thanks for writing in. And I want to read one more. Pat from Albuquerque. Mike and Chad, I really like the format of True Options Masters. I had subscribed to both of your services before, but the additional information provided in Tom has really helped my knowledge of options investing. I look forward to continuing to learn from you guys. Sometimes it's even useful to listen to Cimarelli. I'm currently lifetime with Chad's fast lane profits and quick hit profits. I will be looking to try that with Mike's precision profits when my current subscription comes due. Started trading on my own just in 2019, so the education curve is still pretty steep. Please don't drop me from Tom. Pat, thanks for that email. Hopefully you and I can get on a first name basis at some point. But I am very excited to see you guys write in. Any of you can write in at trueoptions@banyanhill.com. Let us know what you're enjoying, maybe something you'd like us to cover, or maybe just a question that you guys have. And we do appreciate it for those of you who do upgrade to our premium research. That's truly how you can get the most out of Mike and Chad. Pat mentioned Fast Lane Profits, which is a service we're going to be opening up to the public very soon in the next month or two here. And I know Chad's going to be talking about an indicator a little bit today that he's become truly obsessed with because it's so powerful. And that's going to be be at the center of this fast lane profit service. And I know Mike is working on some new strategies for you guys as well. He's working on some things that I'm really excited about that I think just make perfect sense. So let's start with these summaries. So Chad, I'm going to start with you. 1 to 2 sentences. What do you see in the markets for the month ahead?
Yeah, thanks, Chris. So just looking over the next month, very short term, I have one sector that we're going to have on our radar. That's the energy sector. That's where we're looking for profits here over the next 30 days. But I have a couple other sectors that we're going to look at on this rotation to keep an eye on this month, but that we'll probably be able to come back to in our next monthly update.
Sounds good. So you're looking a little sector specific. You see something in energy.
Yeah.
Sounds good.
And we'll dive into the sectors today to look at a few stocks as well.
Love it. Love it. Sounds good. Sounds exciting. All right, Mike Carr, what are you looking at? 30-day forecast. Let's go. 1 to 2 sentences.
I'm cautiously bullish, and I'm going to show some charts that highlight when to go from cautiously bullish to outright bearish.
Gotcha. So cautiously bullish in the short term.
Correct.
Is that right? Gotcha.
Correct.
Gotcha. Well, we always know this stuff can turn on a dime. So cautiously makes sense. All righty. Well, let's go ahead and we'll dive in. Chad, you want to go ahead and share your screen and walk us through what you're seeing?
Yeah, let me pull this up. This is the relative rotation graph that we're using to break down where each of these sectors are at. And I'll have to do a quick explanation each time we look at this because it is relatively new to most people. So this is basically going to show, I'll jump back here and we'll start at the beginning of 2021, just so you can see how this thing moves. So there's a rotation that we see these sectors do through these 4 quadrants. And the one in the top right is leading, the bottom right is weakening, bottom left is lagging, and the top left is improving. So as they rotate through these 4 sectors, the center of the chart is the S&P 500. So we're looking at how these sectors perform relative to the S&P 500. And this chart basically takes the relative strength of these sectors compared to the S&P 500 and then adds a momentum indicator to kind of get this rotation that we're seeing once they build the formula out. So we're looking at relative strength and momentum, the 2 most powerful indicators in the market to figure out where these sectors are at relative to the S&P 500. And after studying this for years and doing a lot of research into it, the biggest moves and the biggest returns come from this lagging and improving quadrants. These are the 2 quadrants where you see the big jumps, the big gains. By the time they get into leading, they're leading the market, but they don't lead the market forever. So this can be a short run where they're still leading the market, but then they start to weaken, and then they end up eventually lagging the market again. And then we kind of go through this whole rotation cycle. So today you can see that there's really no sectors in the lagging market. We have the consumer discretionary sector fund just kind of dipping into it, but since it's just getting into the lagging, we don't want to put that on our radar just yet as far as an opportunity that we want to jump into. That's why I'm looking at the energy sector over here as a sector that over the next couple of weeks, we can still see some bullish momentum and some plays in these stocks. And we'll dive into those stocks in just a second. But as we zoom in and look at all these other sectors, you can see that there's sort of this rotation going from the safe haven assets and the sectors with the consumer staples, the utilities, the real estate. They're all falling into the lagging quadrant as we speak. They're all going on this downward path, whereas the consumer discretionary stocks, technology stocks, they're headed sideways and they're probably about to turn higher. We just haven't seen it yet. So while those are interesting to keep on our radar here in the coming weeks, it's not time to jump in just yet. We want to see them turn higher, and then that'll be their cue to kind of jump in and play those stocks for bullish trades. But with the energy sector, and this chart also is a 1-day relative rotation graph. And what that means is that you can see these little dots that show up on the chart. That's each day. So here we're only looking at a couple of weeks for the energy sector for these trades, because after that, it could turn, it could fall, it could rotate into somewhere else. But if we looked at a weekly chart, then we'd be going out, about 3 months for our outlook. So we're going to stick with the daily charts today to figure out the stocks that we want to keep on our radar. So with the energy sector, when we pull up the RRG for energy stocks, now we have it based on the center of this chart is the energy sector, the XLE. So I'm diving into the energy sector to look at how these stocks are rotating within this space, not relative to the S&P 500 anymore, because we already know that energy is leading the market. Now we want to see which ones are about to start, or energy is not leading, excuse me. It's improving and it's heading towards leading. So we're looking at stocks that are in here that are kind of doing the same thing. And you can already see over here on this side of the graph that we have Valero Energy, basically in the same spot. We have Phillips 66. We have RIG, Transocean coming up pretty strong here out of the lagging quadrant. And when we start diving into these charts, you'll see that they look pretty similar here. They fell off on a cliff from the pandemic, been choppy since then, some nice rallies, but they recently went through a sell-off. And that kind of is what put them into the lagging quadrant on this daily chart. And then they're starting to turn out of that. So we're looking at ones that are already starting to turn higher. So Valero is starting this bullish momentum. So it's one that you want to keep an eye on this month. That's a stock to definitely have on your radar. Phillips 66 is another one. You can see it looks very similar to the chart we just saw. They're in the energy sector. They're related to oil prices. So they see similar price moves. But based on where they're at, based on where energy's at, we know that we want to keep an eye on those two stocks. And then even down here, you can see early on, looking at XEC. This one's just now kind of getting into it. So it's starting that turn higher though. This is what we wanted to see out of the sectors from the consumer discretionary stocks and the tech stocks. We want to see them start to make this curve higher. And that's when you have the biggest chance for returns in the short term. And the difference in this chart, it had a strong run higher, then it consolidated, started to pull back. But over here, we haven't seen the push higher yet. And it's starting to improve, the momentum's starting to pick up a little bit. But until it actually starts to push higher, that's when you know it's time to jump in. So we wanted to keep an eye on Cimarex Energy here. Just wait for it to push about above 66. I don't know where it's trading at this morning yet, but we want to see it close above that too, not just trade above it and then pull back. We see all these candlesticks kind of going above it and then dipping back down. So we want to get a close above about 66.75 on Cimarex and then add it to your buy list to keep an eye on that one for this month. So those are the sectors, energy sector, and those are the three stocks that I want you to keep an eye on for this month to try to find some profits in. So I'll kick it back to Chris.
Yeah, so thank you, Chad. This is I love this. I love this indicator and I love this chart because basically what you've done. So RRG combines relative strength and momentum, which are truly like two of the best, like most powerful technical indicators that we can use. And this basically takes both of them and fuses them together and creates this beautiful chart. So it makes sense when it's rising out of lagging. That means it's beginning to bouncing off of its oversold conditions. You want to catch it as it's moving up through that red box into the blue, into the green. Now, I do have a question for you, Chad, to sell us on the sector chart that you showed us before too. Some of the charts are a little bit, or excuse me, some of the lines are a little bit further out. So yeah, XLE is a great example. A lot of these are kind of still in the center of the universe. They're pretty close to the S&P. What does it mean that XLE, the energy sector, is so far out?
Yeah, that's a great point, Chris. And this is something I should have brought up because this is a key thing that I look for that I'm used to it. So when I look at these sectors and the stocks that I highlight, this is something that I pay attention to. But so basically the center of this chart, remember, is the S&P 500. So the closer that they are to this, the closer they are in line with the movements that we're seeing within the S&P 500. So since they're all relatively close to it, they're just kind of trading in line with the S&P 500 daily moves.
Gotcha.
As they start to veer away from that, they're seeing bigger moves. So basically volatility. So energy sector has been extremely volatile. It's put it out here on the outskirts of this chart. And this one's way out right now. You wouldn't typically see one this far out because these are the sectors. So they tend to stay a little bit closer. When you get to stocks, they can get extremely wide. But for the sectors, energy's been just extremely volatile. So it's on the outside, but that's also where you see the biggest returns. So volatility for a trader, it's your friend. For investors, they tend to not want to mess with it because you can see some wild swings. But as a trader, this is where we see our biggest moves. So the ones that are out here are the ones that I pay attention to, and that's where we look for the biggest profits. Yeah,
and energy has always been a very cyclical sector, like rises fast and hard, falls fast and hard. So it is certainly just in general a great sector to always keep an eye on for trading. But it is interesting how much it's diverged from the rest of the market because truly it's on the extremes. I mean, ever since the pandemic last year, energy has slowly but surely been rising higher. And I guess we probably have seen a bit of a dip recently. Now that we see this new Delta variant, on the rise, this new version of the virus, it's almost going vertical here. So I think it's a bit of a contrarian play for you to be predicting some bullish activity in it. Because I think rest of the financial community is probably expecting the opposite because fear is starting to creep into the markets. But at the same time, energy is, it already went down so much. If people are going to sell things, they're probably going to sell the stuff that's gone up a lot already. So I think this is an exciting prediction.
Yeah, and just to close, this chart is kind of showing us that we're moving into a risk-on phase with the
excuse me,
where we've seen the utilities, the consumer staples, they were up here improving and then leading the market, and then they're starting to weaken. But now the consumer discretionary stocks, the tech stocks, we see volatile energy stocks, they're starting to be the ones that move higher. And again, it's short term over just the next couple of weeks. So this fall could definitely still see a lot more volatility in these types of stocks. But for now, over the next couple of weeks, this is where we're going to focus.
And I'm just curious, Chad, which one is technology? Is that XLK?
Yeah, XLK. So it's over here.
So this is so interesting because I remember back in May, you were bullish on tech stocks and you actually predicted a pretty significant rise. And sure enough, QQQ, NASDAQ went on to post all-time highs. And you used this chart. So at that time, it was going from probably weakening to improving, then to leading. And all you had was this chart that helped you predict that.
Yeah,
Again, true options masters were short term. So now it's in the weakening. Tech stocks are in the weakening phase. So
so this is back to May 17th. That was around when I picked this up down here in the lagging quadrant.
Yeah, so this is exactly what you saw. And you were like, guys, it's time to jump into tech. And yeah, I thought that was such a great call. And it's all because of this incredible tool that you have. So.
Yep, comes in handy, that's for sure.
All righty. Right. Well, let's go ahead and kick it over to Mike. So Mike, you want to share your screen and show us what you are looking at? I think you're going to do some higher level stuff, maybe on the S&P 500.
That's correct. I am going to take a look at the broader market. I want to start with just a very simple approach. This is the S&P 500, and the blue line is a 50-day moving average. Very simple indicator. As you can see, the 50-day moving average has identified significant pullbacks in this bull market. So a break below that tells us it's time to stop being cautiously bullish and it's time to be bearish. That would have worked very well in February 2020. It identified the bull market. A couple of whipsaw trades here. You would have been in the market. The break of the 50-day would get you out. Short-term dip, you would have gotten right back in at the level you got out. So nothing to lose by following this indicator. In the most recent pullbacks, we have stopped right at that 50-day. A break of that 50-day is going to be significant because a lot of technical traders at hedge funds are now watching this. And if they see a move below it, there's going to be a panic sell-off. So that's very important to watch for, and this is on a closing basis. Don't worry about intraday dips. When it closes below the 50-day, just be bearish. That's the better approach here. Here's the QQQ, same idea. This is a bullish chart. It's moving higher. And again, I just want to emphasize some simple ideas this month. We know it's bullish because the prices over here on the far right are higher than they were over here on the far left. Don't let this market confuse you. If it's moving up, it's bullish. And that's where we are now for August. We're in solid uptrends on the major indexes. I do want to get a little bit more complex for a moment and just look at breadth. And breadth here is really extraordinary. We are seeing here that the number of stocks above their 50-day moving or above their 200-day moving average is at 85%.
Wow.
The long-term moving average is about 60%. So this is unusually high. And when we see things that are unusually high, traders tend to get nervous. That's not at all what this is telling us. Okay, it is unusual, but in this chart, The blue bars indicate times when the percentage of stocks in the S&P 500 above their 200-day moving average exceeds 80. And as you can see, these are generally bullish times. The black line is the S&P 500. So when more than 80% of their stocks in the index are in long-term uptrends, the index itself is in a long-term uptrend. Now, bull markets generally die of old age. The longer they go on, the more likely they are to end. And this red lines at the bottom count the number of days that we've been above 80% on the breadth indicator. And as you can see, it can go significantly higher. Our peak here is at about 92. In the past, peaks have generally come above 120. So we have another month or so that we should expect a bullish market here. It's going to be volatile because when it does peak, it's going to be a significant top. And heading into a significant top means you're going to have a lot of volatility. So that's what we're looking at. We have additional room on the upside. We are most likely going to see another month of bullish activity with periodic heart-stopping declines along the way. And it's going to be important to remember breadth, the moving average, 50-day moving average are both bullish right now. I just want to wrap up here with the chart of Bitcoin because Bitcoin is popular. There are no fundamentals to Bitcoin. I know what the proponents say about fundamentals. If there are fundamentals to Bitcoin, Bitcoin is worth $1. If we're going to use it as a currency of exchange and use it interchangeably with regular currencies like the dollar, it has to be stable. And if it's stable, you don't have volatility. And as Chad noted, traders need volatility. So the only way to make money off of Bitcoin is if it continues to lack fundamentals. Even though it lacks fundamentals, it is a great technical market. This is a 50-day moving average, the blue line on Bitcoin. And as you see, it captured that up move, got out. It's volatile, so that's a significant move. And then it got out days before that crash in May. So the 50-day moving average on Bitcoin, very, very useful. As far as whether this is a sustainable bounce or short covering, I think it's important to understand the market for Bitcoin changed dramatically near that peak. Institutional investors started trading in size in the Bitcoin and cryptocurrency markets. The only way they were able to do that is because they had the ability to borrow against Bitcoin and they had the ability to short Bitcoin. So the large hedge funds and SAC Capital, Steve Cohen's, I guess, 0.72 now, a prime example of a hedge fund that watched the rally, said, we want to trade this, created the infrastructure to trade it, and is now active. Other hedge funds also active. The only way they can be active is because they created the infrastructure to go both short and long. With the ability to go both short and long, it's no longer an elevator ride up. Bitcoin now has the ability to fall, and Bitcoin has the ability to be in an extended bear market because these hedge funds can profit from the downside. I know these are the hedge funds that Wall Street Bets hates, but they have a lot more money than Wall Street Bets. So yes, this is a different market dynamic. Technicals are going to rule. A simple stochastic works well. 50-day moving average works great, but buy the dip and hold on for dear life is not a strategy that's going to work now that you have billion-dollar players betting against you.
So this is interesting. Just to recap, they created this infrastructure for institutional investors to trade it, and that creating that infrastructure is what made it go up so much. But now that it's in place, they have the ability to short it, whereas before you couldn't short Bitcoin. So before there was only one way you could make money in Bitcoin, that was from it going up. But now you have these huge players that can use technicals to call the tops and bottoms. That's a pretty compelling narrative. I know personally, I own quite a bit of crypto. Of course, I'm 30 years old. I'm going to hold on to this stuff forever. I'm in no rush to retire or anything like that. It's something that's very interesting. So it's above its 50-day right now. And it is so interesting, Mike. Like if you had just bought this thing back, looks like last October, when it moved above the 50, you would have caught the entire rally. That's incredible. And now obviously it looks like in April, May, there were some whipsaws here. And that's where it gets hard to trade. I know you've written about this before, because then you have to kind of move in and out. It's like, okay, that's a sell cycle. This is a buy cycle. Oh, another sell cycle, another buy, another sell. But even so, it's like what you noted before, looking at some of the other charts, is it's pretty much going to put you right in line. So this is such a great indicator to use. Mike, can you go back to your SPY?
The 50-day or the more colorful
The 50-day, yeah. Okay. And so this is, and again, the 50-day here, when it broke it last, February and March, that was obviously a pure sell signal. And it does get tricky because there are some false starts a little bit. In September, October, those would have been great opportunities to trade once it dipped below, profit on some puts. And then it's even more clear for QQQ right now that we're well above that 50-day. So this is why you're cautiously optimistic. And I know you made a point about breadth as well, where, a lot of people look at breadth as like, oh, well, it's high. It can only go one direction from here, down, right? That's bad for the market. It's like, no, it's actually high breadth means that a very large number of companies are leading the market higher. So it's not just the leaders alone. So again, I think it's very interesting. You also have a contrarian approach. And I think that's so important because, contrarian traders, we can kind of stay ahead of basic human psychology. I know that's so important to be able to trade, and you can almost read that human psychology in some of these charts, just to give you a bigger scope of the market. So.
And I would like to note the 50-day moving average is your sell signal.
Right.
You're going to need different tools to get back in because you don't want to let it go this far after the bottom. So when we break that, we'll be back month after month telling you about the signals that work after bottom. So just don't try to use the same.
So you don't want to use 50-day. Gotcha. So you don't want to use the 50-day to buy back in. It's a cue to sell.
Correct.
Gotcha.
Yeah, you would have, the market was up 21% from the bottom before you got the buy signal. So we want to use shorter term indicators to get back in.
Yeah, and I can chime in real quick to just be clear, like in September, October, when we saw those whipsaws, you would get back in. You would just jump right back in, right? Once it's above the 50-day, because the short whipsaws, you can use the 50-day. It's once you start to see the steeper drops, you don't want to wait for that big rally to get back in. So I just wanted to make that clear. That 50-day is still a reliable indicator when you see those whipsaws. It comes right back above it, just get right back in.
Makes sense. I mean, I remember last March when, it seemed like the bottom was going to keep falling until we got stimulus. And then it just became this whole narrative of like, when's the stimulus coming out? When's the stimulus coming out? And it just became, people were so panicked that I remember I was able to make a lot of money right at that very bottom. So that's a good point. You don't necessarily want to wait because you would have missed so much of that rally. I mean, probably, more than half of the move back if you had waited. So
that's why we're doing this every month.
All right, guys. Well, you both covered some very different topics today. Mike, you're cautiously bullish, but you do also understand that, we are operating in some extremes here. Breadth is very high and could reverse. But in the meantime, the data is showing that we should be bullish. And Chad, you've got a contrarian bet on XLK, which is the energy sector. And Chad, do you want to
XLE.
recap? XLE, excuse me. XLK is tech. Thank you. Chad, do you want to recap what the three stocks that you were the most interested in were? I believe Cimarex was one.
Yeah, let me just pull up the chart real quick for me. Yeah, Phillips, Valero, VLO, Phillips 66, that's PSX. And then the last one was, yes, Cimarex, XEC. So those are the three tickers for the ones to watch this month. And again, it's really over the next couple of weeks. Once we start getting near the end of the month, we'll be rotating into some more stuff. And we'll bring that up, next month.
Gotcha. And Chad, what do you think about Mike's cautious bullishness? Do you agree? Do you disagree?
Yeah, that's fair to say. I mean, it's a lot of worrying headlines that are out there right now. I mean, I see them every day about the variant, COVID, Delta, all this stuff that's, vaccine mandates and all these issues that they're having to go through to just try to keep the economy going. So the worry is that we're going through another shutdown. And actually, I write about that in tomorrow's True Options Masters with the way to play it if you're worried about it. It came up on some unusual options activity yesterday, actually. So it was very timely to throw it in there. And it just, when I saw it, it was just like, yeah, this is, if you're worried about the pandemic coming back up and maybe possible lockdowns and all this, then there's so many ways to trade it. This one, we saw a big trader come in and place some trades. So check that out tomorrow and you'll see just some ways to kind of hedge or, protect against some of the risks that we're seeing. But for the most part, I'm optimistic as well. I'm bullish, cautiously bullish. Sure. Yeah. I mean, I'm always kind of cautiously bullish because there's so many different things and we rely on the charts so heavily that, from month to month, they're going to see how much these things change. That just, the key levels break, breaks below the 50-day moving average, all of a sudden we're bearish. So nothing outside of that really has to change too much other than on the charts.
Well, let me ask, so that brings to a really interesting topic because you guys care about the charts. You're technical traders, you're systems traders. And so how do you take that, and also the fact that we've got this huge news story, and obviously we know what happened last year. So now we've got this thing on the rise that everyone's paying attention to. You guys don't really care about that because ultimately you're going to, whatever you need to know is going to appear in the price charts. Is that right?
Yeah. I mean, that's the way I look at it. At least I speak for myself that we're going to continue to stick to the strategy. So price charts are one thing, following a proven strategy to where it's been through these things. And yeah, we may see some losses when you go through something like that, but just by sticking to it, you're going to continue to see the winners and you're going to definitely be on the right side as we come out of that. But yeah, I mean, all the noise, we see it all, it goes into our minds, but that's why you rely on the strategy because there's constantly noise in the market. I mean, right now it's the pandemic and that's front and center with the Delta variant, but after this, it'll always be something else. Later in the year, it'll be, the debt ceiling and having to push that back. And there's just always something going on that if you look at it, it could tell you not to be bullish at all, pretty much any time of the year. So to kind of get around all that, you just trust the strategy, trust the price charts, and the key levels to watch, and then you can confidently still place trades. So Mike, do you feel about the same? A little different?
Yeah. I mean, price is the only thing that never lies to us. So the chart tells us what we need to know. The media lies to us. The politicians lie to us. There is one thing I keep in mind as a general rule. Elliott wave is a theory of the markets that has a lot of precision to it and needs a lot of work to be useful. But it does have some principles that are useful to remember. And one is called the principle of alternation, which says basically this market is not going to unfold exactly like the last one. We're going to alternate between big bull markets and small bull markets. We're going to alternate between big bears and small bears. So we can look back, the debt crisis that's coming is a lot like 2011, where we did see a 20% decline over 3 months, but it's not going to play out exactly like that. We're not going to see a sharp drop. We're going to see something related to that story, but we can look back at that chart and expect a general similarity, but a very different specific unfolding of the trade.
I think it's a great point, Mike. As humans, we're optimistic by nature. And we want to assume that history is going to repeat itself. And if you miss the trading opportunity in 2011, you're going to catch it this time. or if you missed the trading opportunity last year with the pandemic, you're going to catch it this time. But like you said, people are anticipating it'll be the same, but it almost never is. Why? Because people are anticipating it this time, and they're reacting differently than they did the time before, because they now have this bias of history that's influencing them. So, I mean, last year during the pandemic, I mean, my goodness, like I remember I couldn't believe how fast the market was falling. I called a bottom way too early. And I think people are anticipating, a dramatic sell-off that's going to happen because of the rise of this Delta variant. But at the same time, if enough inexperienced traders and investors are anticipating it, true options masters like us and our readers, we can stay one move ahead of the basic, the crowd and the inclination to panic too fast and to get greedy too quickly. So I think that's a great point, Mike.
Okay.
All right, guys.
Thank you.
I think we've had a great call today. To our readers, you guys can look forward to this series. First Wednesday of every month, we'll give you our monthly market outlook. Hope you enjoyed this video. Please leave some comments below. If you're new to our channel, please subscribe. You can subscribe here on YouTube to get these updates. And there's going to be a link in the description box for you to subscribe to True Options Masters if you aren't already. This way you get our insight every single day in your inbox. Please like us on Facebook, like us on Twitter. True Options Masters is growing rapidly. We appreciate everyone for reading our stuff and engaging our content. And so thank you guys. And Mike, Chad, we'll talk soon.
All right, sounds good. Thanks, Chris. See y'all later.